welcome to Aarti Drugs Limited Q4FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Adish Patil, CFO at Aarti Drugs Limited. Thank you, and over to you, sir.
Thank you. Good morning, everyone. Hope everyone is doing well. On behalf of Aarti Drugs Limited, I extend a warm welcome to everyone joining us today to discuss our financial results for year ended March 31st, 2023. On this call, we are joined by Mr. Harshit Savla, Joint Managing Director.
Hello, good morning, everyone.
Mr. Harit Shah, Whole-Time Director of Aarti Drugs Limited. And Mr. Vishal Savla, Managing Director, Pinnacle Life Science Limited. And ACA, our Investors Relations Advisor. I hope everyone had an opportunity to go through the financial results press release, and we'll be posting the investor presentation very soon for your ready reference on the stock exchange and also on the company's website. In the year gone by, we are pleased with our financial and operational performance amid a challenging business environment. API segment revenue grew 12% year-on-year for FY23 with good volume offtake for chronic therapy. Specialty chemicals, in which the company manufactures niche high-margin chlorosulfonation products, continued to witness a high growth. Specialty chemicals grew about 38% year-on-year for FY23. The company reported a good set of performance in Q4 FY23 with a top-line growth of around 7% year-on-year on a consolidated basis. The company's performance improved considerably on a sequential basis due to ease in the input cost and efficient working capital management. On a sequential basis, the EBITDA margins improved by around 190 basis points due to operating leverage driven by improved capacity utilization. With high inventory cost of raw materials and finished goods almost getting over, we expect improvement in the margins in the upcoming quarters. The margin expansion would be further accelerated by the upcoming foray into dermatology product segment and backward integration in the second half of FY24. And in addition to that, with stable input costs. Our dermatology products are import substitute, and the company already has good inquiry inflow from the customers for this product. Once we take the validation batches, we are well capable to scale up this capacity immediately. The balance sheet position as on 31st March 2023 continued to remain healthy, with leverage remaining comfortably at around 0.51x. We recorded the highest ever monthly sales in the month of March 2023. As a result, the receivables as of 31st March 2023 have increased by some extent on a temporary basis. The receivables are expected to normalize by the end of Q1 FY24. Coming to overall standalone performance of the quarter, the revenue for Q4 FY23 stood at 697.2 crores as against 642.1 crores, a growth of approximately 9% year-on-year. The standalone business contributed approximately 92% to the consolidated revenue for the quarter. Around 62% of the revenues came from the domestic market and 38% from the export market for Q4 FY23 for the standalone business. Domestic revenue grew approximately by 13%, while exports grew by around 7% year-on-year for Q4 FY23. With the API business, the antibiotic therapeutic category contributed around 45%, anti-diabetic around 15%, anti-protozoal around 16%, anti-inflammatory around 13%, antifungal around 8%, and the rest contributed around 3% to the total API sales for Q4 FY23. Formulation segment revenue stood at 56.8 crores for the quarter. The formulation segment contributed around 8% to the consolidated revenue for the quarter. The company has substantially increased the share of exports on a year-on-year basis. The share of exports is expected to improve further going forward, driven by various filings the company has filed, especially in the semi-regulated and the regulated markets. The company will also continue to invest in new product launches, filings, and capacity enhancement. The company has incurred, on a consolidated basis, the company has incurred a capex of around 315 crores in the last 2 years, which is approximately 50% of our 600 crore capex target, mainly towards capacity expansion, backward integration, and new product launches. As communicated earlier, the company will finish almost entire capex by the end of FY24. The only remaining capex would be a brownfield expansion of anti-diabetic facility at Sarigam. And as a result, the capex is expected to be in the range of 250 to 350 crores for FY24. The capex will be funded through internal accruals as well as some long-term debt. Tarapur Greenfield capex for dermatology is expected to be completed by the end of Q2 FY24. Tarapur specialty chemical capex is also expected to be completed well within timeline by the end of Q1 FY24. The majority of the company's 600 crore capex is expected to be completed by FY24. These initiatives are expected to reduce the cost along with expansion in the profit margins via backward integration and the top line growth. The company is also investing in process improvement and R&D to further reduce the cost along with improvement in efficiency. Company will be also investing in the renewable energy for the upcoming years. Over and above the capex undertaken, the company continues to evaluate multiple opportunities and will make strategic and practical investments if required. In the upcoming year, we plan to continue expanding our capabilities and enhancing our offerings to meet the ever-changing needs of our customers in terms of regulatory environment as well. Recently, we got 2 of our key products from antifungal and anti-diabetic therapy successfully audited by a regulatory body. One of our key goals for the ongoing financial year is to increase our production capacity, allowing us to better serve our growing exports as well as domestic customer base. We also plan to invest in new technologies and equipment that will help us streamline our processes, improve efficiency, and also reduce the environmental burden of the manufacturing of these APIs. With new facility for dermatology coming up in FY24, along with commencing the operations of the expanded brownfield facility of specialty chemicals at Tarapur, the company expects growth in revenue as well as profitability in upcoming years. With this, we can now begin question and answer session. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. So on FY23 basis, if you could now give, what is the ciprofloxacin contribution to the total sales, and your top 10 products contribution now stands at what? And also your top 10 client contribution for your API business.
Hi. Yes. So the Cipro processing has remained to be one of our topmost.
Sir, sorry to interrupt you, but your voice is breaking.
Can you hear me properly right now? Is it okay?
No, sir.
Uh,
Sir, one moment. Let me disconnect and reconnect you, sir. Ladies and gentlemen, thank you for your patience. We have the line for Mr. Harish Patel connected. Sir, go ahead.
Yeah, sorry for the disturbance. So the Cipro remains our topmost product. The contribution would be somewhere around 15 to 20% for the standalone business from this antibiotic product. And the top 10 would be more or less similar like last year in mid-70s to the standalone sales. And overall consolidated it will be slightly 10%.
Hello?
Go ahead, Rashmi, you're audible.
Yeah, I'm saying the top 10, sorry, I was not able to hear. Top 10 product contributions on consolidated basis, how much is it?
Okay, the contribution numbers, I will tell you the top 10. But overall from sales point of view, it is from mid-70s.
Sir, sorry to interrupt you, but your voice is still not clear, sir. Your voice is breaking. Participants, please stay connected while we rejoin Mr. Patel back to the call. Participants, thank you for your patience. We have Mr. Patel reconnected.
Yes. Can you hear me now?
Yes, sir, we can hear you.
Okay. So the top 10 products contribution remains to be in the mid-70s on a standalone basis and early 70s on a console basis.
Okay. And what about your top 10 client contribution?
We will be posting our investor presentation very soon. So there we will be giving the exact numbers. Right now, I might make a mistake in telling that number.
Okay, all right. And on this Derma API, if you could give more color on it, like, what is the capacity installation that we are doing for the salicylic acid? What kind of demand we are seeing in this product? Whether this would be more export-driven product, or it would be more domestic focused in terms of, potential sales also. If you can give some color on it, it would be great.
Okay, so mainly this is an import substitute product. So domestic sales will be more for this particular product. But if we examine derivatives of this product, then it has more export potential as well. Then overall domestic import for this product is anywhere within the range of 300 to 400 crores. So that would be the overall domestic potential for this product. And we have already spoken with a lot of customers regarding salicylic acid, and they are pretty much interested in having an Indian source as compared to the Chinese source.
So as of now, for this, there is no Indian source. A lot of the companies are dependent on the export for this particular product, and that is why we have entered into this. Or if you can give any rationale behind entering into this product.
Yeah. So one of the rationale is it is an import substitute product, and we had a good process for salicylic acid, and we feel we can very easily compete with Chinese sources. Earlier, this product was manufactured in India, but over last 2 decades, slowly, the manufacturers of Indian manufacturers had closed down, and Chinese imports had increased substantially. So almost, we believe that almost more than 80 to 90% of the India's consumption was being imported. Probably there might be some salicylic manufacturers who are using captively, but mainly the entire product is being imported from China.
Thank you. Sorry to interrupt you, Rashmi. I'll request you to join back the queue for a follow-up question. The next question is from the line of Chirag Dagli from DSP BlackRock. Please go ahead.
Yeah, sir, thank you for the opportunity. Sir, can you split the 600 crore capex program in new products, capacity expansion for existing products, and backward integration? Just ballpark numbers will do, sir.
Yeah, so going forward for this financial year, that is FY24, we believe that apart from say 40 to 50 crores of debottlenecking, brownfield expansions of the existing products, and the maintenance capex as well, keeping aside that 50 crores, the rest of the capex would be divided mainly, say for example, 40% into two greenfield projects which are happening, one in Tarapur and another in Saika. So one will be for the backward integration and intermediates, that 40%, and other 40% would be for the dermatology project, which we just talked about, and rest 20% would be in some other products, some new fresh launches, say for example in antifungal or probably in a nutraceutical product.
Okay, so your the press release talks about 14 to 16% margin for FY24. In that range. So first of all, this range is for the full year, right, of FY24? Or is it towards the end of FY24?
No, so mostly it is for the full year, because we expect the things to improve in Q1 FY24 itself. Already for Q4 FY23, we had seen improvements in margins for a lot of products, but the gross contribution was subdued for one factor, because of the fact that in March 23, we had a lot of antibiotic sales in that particular quarter, and as of end of December 22, that is the beginning of this quarter, we had lot of high cost inventory for antibiotic products, which has led to the squeeze in the gross margin because of the product mix. But across the board, we have seen that the gross contribution improvement has already started taking place.
Understood. So, the point was that most of the capex that you're going to do for backward integration is still not getting baked into this 14 to 16%, right? I mean, the backward integration capex will kick in afterwards. Are you suggesting that FY25 margins can improve on this 14 to 16% base?
Yes. So if the backward integration projects go very smoothly, then definitely it can help us go beyond the 15-16% into the margins.
Understood. And you suggested about 40% of the 300 or about 120 odd crores kind of a number for backward integration, which is going to kick in into which is going to be invested in FY24. That number is right, sir? About 120 odd crores?
Yes, right.
Understood. Okay. And the press release talks about a 9% volume growth for API. Sir, this is for fourth quarter or for the full year of FY23?
This is for the fourth quarter only. especially we have seen a very high volume in domestic market for the fourth quarter, as I said, because of this antibiotic demand. And for the entire year, it has been low. It was approximately around 1.5%, but that was mainly because of the fact that we started with a lot of negative macro factors like the Russian war, very high inflationary crude prices, and the raw materials had shot up very high. The selling prices of the APIs were very high, and because of this, the formulation players also felt a squeeze in the margins for generic products, which is supplied to them, because their final selling prices are capped by the list. So because of that, the demand was low in this, and now since December quarter, the prices have started coming off, and that is why we have seen sudden increase in the demand for antibiotic products again for the domestic market.
Understood, sir. Understood. And sir, if you think about API prices, and I'm talking about general, sort of an price index kind of a thing, what was this number, let's say, in the first quarter of FY23, and what did we exit? Like you said, in March prices were very high. What did we exit the FY23 at, sir? So let's say, what is that number?
I understood. So if we compare from March 22 versus March 23, the rate variance is not much. It is just below 2%. Below 2%. So it is so this Q4 growth is entirely because of the volume growth. So we are exiting the, if I say the exiting quarter is more or less same like last year's March quarter. The rates.
Thank you. Sorry to interrupt you, Chirag. I'll request to join back the queue for a follow-up question. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue. The next question is from the line of Bharat Seth from Quest Investment Advisors. Please go ahead.
Hi, congratulations, Rashesh Bhai, Adish Bhai, and full management team. So I have one question for first on for the Rashesh Bhai, if he is there on the line. May I go ahead? Hello? Am I audible?
Yes, sir, you're audible.
Hello, Rashesh Bhai.
Please go ahead with the question.
Yeah. See, my question is like we have, say, in the whole Aarti group, we have separated one as Aarti Pharma, and here Aarti Drugs also is also having some pharma business. So as a investor, we would like to understand what is the rationale and how the differentiation will be creating between these two companies.
Yeah, hi. Rashesh Bhai is not there in the call.
Fair. So, next.
Yeah, I will. So see, the Aarti Group we started back in early 1980s. So the 2 main flagship companies at that time were Aarti Industries and Aarti Drugs. And Aarti Industries, in say somewhere around in 2000, they had invested heavily into CRAMS business. Then slowly, they started marketing very small volume but very high value niche APIs into highly regulated markets because of that CRAMS business, and that is how slowly that business expanded, and then it resulted into Aarti Pharma Labs, and that is how the two businesses evolved. And Aarti Drugs is mainly into very bulk volume products, high engineering products, where you, along with chemistry, you also require very strong expertise in the engineering department. The way you manufacture the material, the way you handle the material at such a high volume, and that is where Aarti Drugs key focus area. So that is how, and right now we do discuss which products are to be taken in which company, so that there is no unnecessary, competition within the group.
Yeah. Okay. Now this, say we are spending, say, our large capex of approximately 600 crore will get over in FY24, out of which several projects are for the growth related and some of is say for a backward integration. So without getting in, so and in FY23 also our anti-infective did not operate at full capacity. So if things improve, I mean, and normalize at this level, so how much would be the additional, say on 2,500 crore, these new capex as well as anti-infective can add on the top line on a standalone number? And in your estimate, if raw material price remain what is the current level, could be a EBITDA margin?
Yes. So the prices have already gone down. If you compare with entire FY23, the prices for FY24 are expected to be lower than the outgoing years, financial year. So at a full scale, means our current capacity can give around 2,800 to 3,000 crores of revenues in terms of standalone capacity. That's the standalone company without including formulation. And with further capex which we are having, we can go till 4,000 crores of revenues with the current capex plan what we have, and then formulation division will add extra on that.
And what could be the standalone EBITDA that you expect with this backward integration and high margin product starts contributing?
So last year was quite subdued in terms of margins and bottom line. Going forward, we do expect, for FY24, we are aiming for around 25 to 35% jump in the bottom line from the standalone business.
And going ahead for 26, what kind of our budget, I mean, or your vision is, or inspiration, whatever you would.
So historically, if we go back 6 to 8 years back, so when we operated at a higher utilization of capacities, we were able to maintain this 15 to 16% EBITDA margins for a lot of quarters, lot of financial years with the ROW markets. So now going forward with more backward integration and more presence in regulatory market, we definitely and also more exposure towards spec-chem, specialty chemicals, which are slightly higher margin products. We do hope, to try to take our EBITDA margins to 18% in next 3-4 years. But that would be our aspiration.
Thank you. Sorry to interrupt you, Bharat. I'll request you to join back the queue for a follow-up question. The next question is from the line of Poojan Shah from Consultants Investment Advisors. Please go ahead.
Hello. Hi, sir. My question would be, first of all, on the formulation. So as we have seen that we are getting a traction on filings and we have seen we have been making filings in regulated and unregulated. Can you just give the split between regulated and unregulated filings, or what are the market we are expecting to share for them? And plus, if you can share the formulation molecule size if we are targeting that market.
Yeah, I think Vishwa will answer your question. Is Vishwa on the line?
So Vishwa's line just dropped. I'm going to reconnect Sir's line. We have a line for Mr. Vishwa reconnected. Sir, you may go ahead.
Hello.
Yes, sir, you're connected.
Yeah. So on the split of formulation sales, as of now, our till the last few quarters, our majority sales were coming from the domestic contract manufacturing business, which is now gravitated more towards the semi-regulated or the emerging market business, where we have invested over the last few years in various registrations. So mainly in Latin America, Asia and Africa, we are getting majority of our sales. Whereas in regulated markets is where our all our new filings are going to. So we are filing multiple products in Europe and North America and Latin America. And probably over the next 12 to 18 months, those approvals would start coming in, and the regulated market business would start contributing to a significant percent of the sales over the next 12 to 18 months.
Yeah, and sir, the market size for individual, if you can say any formulation individual, like ballpark number would work for me.
The market size, which market size?
About the formulation. So we have been filing that formulation. So what can be the market size for that molecule?
I mean, we are filing a lot of oncology as well as diabetic and cardiac products, and most of them would be kind of day one launches post patent expiry. So the potential per molecule would be quite significant, but it will also depend on the competitive landscape. But with our new capacities increased, with the new plant that we have set up, we at full potential we can see from the new launches and new products we can see about 150 to 200 crores revenue increase once it's commercialized.
Okay. And my second question would be on the, we have seen a spike in the March 23 sales. So what could be that reason, and are we seeing the same, are we expecting the same lines for April, or you can say Q1 FY24?
Yeah. So March, the thing is, overall years, sales were subdued, especially for domestic market because of this very high inflationary pressure in input cost as well as the API selling prices, and because of which the offtake, the push demand was less for last year. And since December quarter, the prices have been going down, and now they are like at a very reasonable level if you compare to historical numbers. And that is why we believe that with the upcoming monsoon season, now the formulation companies have really picked up their production volumes, and hence the demand has gone up. So we feel that whatever demand, subdued demand was there in FY23, that might be a history, and now going forward it will be back to the original numbers. So we feel that the demand will continue.
Okay, got it. Thank you so much.
Thank you. Next question is from the line of Tushar Manudhane from Motilal Oswal. Please go ahead. Sorry to interrupt you, Tushar. May I request you to speak through the handset, please?
Is it better?
No, sir.
Better?
Hello, Tushar.
Is this better?
Slightly okay.
Right. So thanks for the opportunity. While you've already highlighted on, let's say, the pricing with respect to, say, the start of FY23 till now, but now with this volume getting normalized and to some extent boosted with the seasonality factor, how do you see the price trend, let's say, for next 12 to 15 months? Is there a scope for increase in prices, or there is more scope for growth through volumes rather than prices?
So whatever budget we are building in for the upcoming financial year, that is purely based on the volumes. In fact, we have factored in negative price growth. What we have observed, that the April month, means for example the Q1 selling prices might be slightly lower, slightly lower, not much.
Okay.
Say for I would say around maybe 5%, not more than that, slightly lower as compared to the Q4. And so that would be, I think, but that would be the bottom, because the raw material prices have stopped going down since the month of February. So because of that lag, now by April month, the prices will stabilize on the sales side as well.
Understood. So subsequently, but you don't see scope of price increase, so to say, but at least it will get stable now.
Yes, correct.
And these stable prices, maybe product to product, it would vary subject to their own supply demand. But where do they stand, like in the overall life cycle, say historical prices, where would they be like compared to say 2 years, 3 years, or 5 year prices? Are they more or less at that range, let's say 3 year average, or it will be there is still scope to go down?
Okay. Slightly difficult to answer in current times. Reason being, in FY20, the prices shot up because of COVID, then it came down, and then again because of coal and other factors, again it went up. Then it came down and again went up because of this Russian war and crude, and again came down. But just to before COVID, the prices of ciprofloxacin were somewhere in the range of say 1800 to 1950 or something like that. And even now, since as of today, they are in the same range. So we don't feel that it will go down, and it is as per the pre-COVID levels. So, but generally the prices stabilizes based on the input cost. So it will all depend the basic raw materials and on those factors.
Understood. This is helpful. Thanks a lot.
Okay.
Thank you. The next question is from the line of Ronak Cheda from Morega Capital Advisors. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yeah. Hi, Adesh. I have two sets of questions. One is on the capex which you are doing on the derma side. You said we should complete it by the first half, and then so can you give tentative timeline on ramp up of the capacity? Let's say in your estimates, when do you see the ramp up in the capacity going forward on this capex?
Yes. So we have the way we have planned. We'll be ramping up every 15 days based on the equipment delivery, and that will go hand in hand with the gestation period as far as demand means capacity utilization means in a regular way. Also, for when we expand capacity, it takes time for sales, for demand to pick up. So it will go hand in hand with that. What we feel is that around March or April 24, the full 100% capex means the capacity will come in. But anyways, whatever we will need for the initial sales, initial demand, that would be operational mostly by towards the end of second quarter.
Got it. And my second question is on the exports market. So basically now we hear a lot of Chinese competition has come back in a lot of other products. So can you talk about the competitive scenario in your products in the exports market, and whether we are at par in terms of pricing? Can you just talk about the environment?
Yes. Harit, would you like to answer this?
Yeah, most of the products we are competing with China, and we are able to compete them in the export market. So we are not unduly worried. And the cost of raw material for Chinese source as well as us is more or less same. Efficiency wise also we are more or less good compared to China. So we don't expect any price pressure on that front.
So, Harit, my question is, what we hear is Chinese players are dumping a lot of the products that they had capacity on hand, which has already been built up. So, are we seeing any signs of that?
No, as far as our products are concerned, we are not seeing similar situation in our range of products actually.
Okay. Thank you so much for answering my questions.
Thank you. Next question is from the line of Vanil Desai from Total Capital. Please go ahead.
Hi, Adesh. Good morning. So the first question is, we had a low volume growth last year, so we had a low base and a lot of capacity is coming in this year. So are we expecting, mid-teens or high-teens kind of a volume growth on the FY23 base? And to tie in with that, I think, Q1 FY23, Q2 FY23, the prices were quite high. So, on a YOY basis, the realization would be lower. So in terms of revenue, how are we looking at? Are we looking at flattish revenue, or are we looking at revenue growth of, double-digit kind of a number?
Yes. So internally, we are keeping targets high. So in spite of all this negative price variation, we still hope that, we want to touch this double-digit value growth. So definitely, as you suggested, that for achieving that, we will require high teens kind of a volume growth in upcoming year. And we feel that it is quite possible. Because last year was exceptionally dull in terms of volumes in few of the acute therapies in domestic markets.
Okay. And second thing, Adish, this US FDA thing has been lingering for a very long time. So I think we had appointed consultant and done modification. So any idea what is kind of what is hindering the resolution of this? Any updates on that?
Yes. So the last response, what we had given to final response to FDA was back in September 2022. And then in February 23, a couple of months back, US FDA wrote a letter back to us highlighting that they need certain clarification on the response in certain aspects and some additional information as well. And for that, they had given 1 month's timeline. So that also we worked upon, and that also we have sent. We also, obviously, we took help of US consultants as well for this. And then by the mid-March, we had submitted additional furnished additional information to US FDA. So now it is like, I don't think it will take time for them to go through that reply. And as of now, we are planning to send a reminder to them, for the follow-up inspection or action, because we feel that we are hoping that there might be unannounced audit any time, because we have submitted the final response as well. And the good part is the file is active because they wrote from their end to us in February itself. So that means that they are actively looking into it right now.
And last question. So I think, on a conference, I think I saw 50 crore, addition or WIP on the formulation side. And I assume that we had enough capacity, to kind of grow in that segment. So can you elaborate on that? What is that capex regarding?
Now, Vishnu, would you like to answer?
Yes. So we have added capex. We have added a new manufacturing facility in Baddi for an oral oncology manufacturing site, basically, which will cater to regulated markets as well as emerging markets. So that capex project has just very recently been completed. At the same time, we are investing into building up portfolio, so a lot of product development investment. So this site will operate duly as we will be marketing our own developed products as well as a contract manufacturer. And we expect revenues to kick in from this project in the next 12 months.
Together, current formulation capacity that you have with this capex, we should be able to go to 500 crore kind of a revenue?
Correct. Yeah, we can expect about a 200 crore growth from new capex. So we can look at a 500 crore plus revenue with all the capex for the utilized.
Got it. Thanks. That's it from me.
Thank you. Next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Thanks for the opportunity. On the greenfield capex that we will be completing largely by end of FY24, or in fact Q1 and Q2 of FY24, how do you see the ramp up of this project happening? So when are we expected to reach optimal 70-80% capacity utilization in both API and specialty chemical side?
Yes. So as far as the API is concerned, we feel because our full 100% capacity will be online by next financial year, that is FY25. So towards the end of FY25, we definitely hope in the second half of FY25 that we should cross that 70% mark in terms of utilization. And as far as the spectrum and specialty chemicals and intermediates are concerned, because we have our own captive consumption, we expect that ramp up to happen very fast. So 50%, in fact, we are hoping to achieve in the second half of this year itself.
Sure.
And then 100%, that will also depend on further expansion of our own API products, so which will further increase the demand of this intermediate.
Sure. And like the combined revenue potential from post expansion from our API and specialty chemical facilities will be 4,000 crore, is what you said.
Yes. For the standalone business, yes.
Standalone business, yeah. And on the specialty chemical side or the intermediate side, the new product that will be launching post the commercialization of our new greenfield plant. So how has been the competition from the China? Existing products, as sir said that there hasn't been much competition, but for the new product that we'll be launching from our greenfield facility, how is the competition from China? Because we have been hearing that there has been a lot of dumping which is happening on intermediate and specialty chemical side from China over the past few months. So how is the situation with our product which we plan to launch?
Yeah. So the thing is, right now we feel that because right now they don't have any competition for that particular product in India, so there was no reason for them to dump as such. Though the prices have gone down for that product as well, which we are planning, but then even with those selling prices, we can compete with China pretty well.
So how many products will we be launching from our greenfield facility post its commercialization?
So around one API and around 3 to 5 intermediates and spec chem.
Okay. Thank you, and wish you all the best. Thank you.
Thank you. Next question is from the line of Zain from Dolat Capital. Please go ahead.
Hello.
Yes.
Hello, am I audible?
Yes.
Zain, we can hear you, but there's no echo from your line. May I request to speak through the handset?
Sure. Yeah. Is it proper now?
Yes, go ahead.
So I want to know that what is the demand right now for the API prices and KSM prices and how they are affecting the gross margins?
API prices right now?
Yeah.
Okay. So the API prices we have seen quarter on quarter there was a decline in the prices, which was obvious because the raw material cost was coming down. What we have seen is for Q1, the current ongoing quarter, that is Q1 FY24, there might be slight decline, say for 2.5 to 5 up to 5% as compared to the March quarter prices. But then more or less we have seen that now the fall in both input as well as the selling prices has stopped.
Hello.
Yeah.
Hello.
Yes.
Okay. So do you see gross margin improvement from the current level?
Yes, we definitely hope that the gross margin will improve. So let's see for this Q1 FY24. Let's see how the numbers pan out. But we definitely are very hopeful for that.
So any ballpark number or any guidelines?
That way, ideally we believe that it should come back to historical numbers. So obviously it should when everything is played out, we feel that around 2 to 3% definitely it should improve. very easily. But in Q4, what that number would be, is, we are slightly hesitant to comment right now, but it should definitely be in a positive manner.
Okay. And second thing is, you utilize high cost RM in Q4, you said, which you guided that you will utilize it completely, but you have not utilized it completely. So can I have the number for that? Any approximate number? How much utilized for this quarter and how much is remaining?
That will see, means, I will roughly tell you, means not exactly what you are asking, but our raw material inventory, which was in early 50s, back in December end, it has gone down by 10 days. And then even our FG inventory has gone down by around 8 days. Finished good inventory. WIP is more or less similar because that depends on the operations. So overall means around 15 to 20 days reduction is already there, in the inventory days. So that definitely helps us, means puts us in a better position as compared to what we were in as of March quarter.
Okay. Thank you.
Okay.
Thank you. Next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir.
Hello.
Congrats for a good set of numbers.
Thank you.
So my first question is, as you were, there is big raw material price decrease, and we will be passing that on some to think more on in terms of first half. How should we think in, as in, will it be like 20% volume growth kind of, and how much will be the realization decrease, sir?
Okay, so realization decrease overall. Last year we had around 10 to 11% positive rate variance, means FY23 versus FY22. 10 to 11% positive rate variation. Now, as we are exiting the March quarter, the selling prices are more or less similar as compared to March 22. So we feel that anywhere between 8 to 10% might be the decline in the rate variation.
Okay, sir. And sir, in terms of volume, your as in press release also talked about some good things and things are improving. So what kind of volume growth can we expect, like 20%, 25%, or will it be like lower in terms of volume growth?
So we are hoping at least, internally we are targeting around 15 to 20% volume growth. That is what we will be trying to achieve. But let's see how it pans out.
Sure, sir. And sir, we used to do buyback earlier, but now we are talking about capex also. So any plans on buyback? Has that been postponed, or like company has decided that they will not go for buybacks? Because we have done four buybacks in last 7-8 years.
So as a company policy, means we have a company policy of having a shareholder payout, means either through the way of buyback or dividend, at around 25% of the PAT. And so if at all means we have missed anything in last year, we will definitely cover up. So that you don't worry about. So we do check, means how much shareholder payout we have done, and we might complete that whatever is remaining in the current financial year.
Because sir, in dividend has been lower in the last.
So whatever is the balance, we will cover.
So that means that we can expect some buyback.
Some sort of shareholder payout, yes.
Sure, sir. Thank you and all the best.
Thank you.
Thank you. The next follow-up question is from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity again. Ashish, if you can update on metformin, what is the current capacity? Because we had added some capacity in that molecule. So what is the current capacity it looks like, the utilization and all? And whether we have launched into the European market or we are still yet to do that?
As far as numbers are concerned, we are already capacity is almost utilized, whatever we are manufacturing. So we are coming up with a very small incremental expansion. Those small means it will be around 40% increase, but still small from what we are targeting. So that expansion will complete in this quarter itself, the current ongoing quarter, that is Q1. And then definitely we will plan a bigger jump later on towards the end of the financial year. And you had another question, right, regarding metformin? What was that?
Yeah, so metformin as of now total capacity stands at?
As of now, we are manufacturing around 1,000 to 1,050.
1,000 to 1,050.
Yeah.
Okay, and we have around 1,100 installed capacity, right?
Yes. So we are planning to expand it by 40% in the current quarter itself.
Okay. So my another question on metformin was that 70-75% we were catering to the domestic market only. So with the increase in the capacity, have the export share increased, and what about our European launch?
Europe, yeah, you're asking. So Aarti, would you like to answer that about the European?
Current volume in export as a domestic is about 50%, not 75% in domestic. It is 50% export and 50% domestic. And we expect the same ratio once we expand the capacity to 1,400 or 1,500 tons in percentage of export as well as domestic market. As far as Europe is concerned, we are talking to 3 or 4 big companies, and our approval process is going on, but it will take some more time. Yeah.
Okay, sir. Understood. Thank you. That's it from my side.
Thank you. Next question is from the line of Nikhil from Securities Investment Management. Please go ahead.
Yeah, hi. Good morning. I hope I'm audible.
Yes.
Yeah. 3 questions, Adish. One is on, you mentioned that the end prices for, so in one of the questions you mentioned that ciprofloxacin end prices are back to what it was pre-COVID. But if you have to generalize for our top 10 products, would it be like 70-80% of the product the pricing would be back to pre-COVID, or what would that percentage be where prices have completely normalized?
See, there are few products like in antidiarrheal space where the inflationary part means that has factored in. So those prices are high. But then high means they're quite stable. I mean, they are not fluctuating much. So that is built in. What happens is in the API business, usually it is a cost plus formula. So the overhead part that has also a certain inflationary pressure built into like salaries and like power and fuel, etc. So whatever gross contribution gap means all the API manufacturers expect. Say 4 years back. Now that gap, that expectation must have definitely increased as of today.
Yeah.
So that will be covered. So typically it happens that in long term, in terms of percentage margins, the long term mean it comes back to that. So that is the reason why we feel that once everything is stable, it is not moving for 3, 4, 5 months. Then definitely we feel that our EBITDA margin should come back to 14 to 16%.
Okay. So for for our portfolio of products, that mean inflation adjusted mean is stable now, and that is why where we are saying our 11% should be around 14 to 16% or 24.
Yes. So right now means for the last outgoing quarter, as far as our standalone performance is concerned now, so we already neared that 13% mark, 12.84 on a standalone basis EBITDA margin. So we are inching towards that. And in the December quarter it was lower, by almost 1.8%.
Okay. Second question was, you mentioned that in March quarter we had a high sales of antibiotics, and I think over the last 2 years because of COVID, the inventory at the customer or the formulator side and even in the market has been fluctuating. Right. If you have to look at now, would you say that the inventories in the marketplace at the customer level, the formulators, and even in the end channel is largely stable, or do you think there is some more pain on the inventory side which can happen? Broadly for the whole portfolio, not for some specific products.
Okay. So this kind of pinch we did not suffer in anti-diabetic space, so that remained stable throughout the last financial year as well, and even now it is okay. In anti-diarrheal space also we saw that the demand was quite good for the entire year. It was mainly the antibiotic space which suffered a lot in last year, and at least for our product portfolio, that is. And what we feel is that because March quarter itself was so good, so which means that issue of inventory pile-up should be gone away. Otherwise, they would not have bought so much in the March quarter. So it seems like the things are stable.
Okay.
Thank you. And sorry to interrupt you, Nikhil. Due to time constraint, ladies and gentlemen, we will take that as our last question. I will now hand the conference over to Mr. Adarsh Patil for closing comments.
Okay. Thank you everyone for joining us today on this earnings call. We appreciate your interest and all the questions you asked regarding the financial results of Aarti Drugs and about our future. If you have any further queries, please contact SGA, our investor relations advisor, or you can reach us directly as well. Thank you.
Thank you very much. On behalf of Aarti Drugs Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Thank you.
Thank you.